Welcome everyone to another episode of the Say Yes to Profits podcast. I'm super excited about today's episode. We're going to talk about taxes. In particular, we're going to talk about the tax implications of an S-corp versus an LLC. Normally during this time, I get a lot of questions because as of the date of this episode, if you're considering being an S corporation, you have a deadline. And the deadline is March 15th to file your application and your form with the IRS. And so I get a lot of questions centered around if I should be an S-corp, what is that going to look like? What is that going to result from a tax savings, benefit, or advantage? How should I operate my business as an S-corp versus an LLC? And so many more questions. And so this episode is going to discuss, again, the tax implications. Now, in a previous episode, I talked about the advantages and disadvantages of an LLC versus an S-corp, and I'm going to link that episode in the description for you to go back and watch that as well. Here's what you have to understand. When choosing between an S-corp versus a limited liability company, which is an LLC, one important consideration is the tax implications of both entities. Now, here's what I need you to understand. An S-corp is actually an LLC. It is an LLC taxed as an S corporation. Now, there are unique benefits and drawbacks to being an LLC versus an S corp or an S corp versus an LLC as it relates to taxes. And you, as the business owner, need to really get understanding and clarity on the benefits and the drawbacks before you make a decision either way. So let's get into that in this episode, okay? First, allow me to introduce myself. I am Octavia, CFO for consultants and entrepreneurs who desire to gain financial clarity and control so that they operate from a place of financial power. And because of that financial power, they reduce their business taxes and say yes to profits. Now, on this episode, I always like to give you updates on what's going on here at the firm, what we have going on as a business, so on and so forth, so that when you see us out, you can be like, hey, Octavia, I heard and listened to your episode where you talked about X. How is that going, right? And so I'm so happy to report that I recently interviewed on Fox 5. Yes, Fox 5 here in Atlanta, Georgia. I actually interviewed on Portia TV, which is on Fox 5. And so they wanted a business expert, someone that could give tax strategies for businesses and individuals. And guess who they selected? Yours truly, Octavia. They even wanted a client of ours to come on. And so I invited one of our phenomenal clients, and she flew in at the last minute, you all, from Ohio to Atlanta to discuss the huge tax savings her firm experienced by hiring us as her CFO team. This was such an amazing opportunity. I am so very grateful, you all. I posted it everywhere online, so make sure you're following me. Definitely, if you're watching right now on YouTube, you see all of the pictures. If you're listening, you can go to octaviaconner CFO on Instagram and you will see the pictures there as well. I even posted on my personal Facebook page and I said, Granny, I made it to TV. Before my granny passed, her and I will always talk about the success that Say Yes to Profits were going to have one day. And one of the things we discussed was that one day this face will be on TV. And it actually happened. So definitely check out the pictures and I will let you all know when the actual episode airs so that you can watch it as well. So that's what's been going on here at Say Yes to Profits. Now let's deep dive into the tax implications, starting with an S corporation. One of the major benefits of forming an S-corp is the ability to avoid double taxation. Who wants to be taxed twice, right? No one. Well, with a traditional corporation such as a C-corp, the business is taxed on its profits and the shareholders are taxed on their individual income from the corporation. However, with an S-corp, the business's profits and losses passes through to the shareholders' personal tax return. Now, this means that the business itself is not taxed at at the corporate level, which can result in a significant tax savings for small business owners. Listen, when I first did this for my business, I was shocked at the tax savings. You all, I saved well over like 30% on my taxes from the previous year. Okay. So this is huge. But here's the thing. Please understand that as an S-corp, it is not a separate taxable entity. Remember, I said an S-corp is an LLC taxed as an S corporation. Because it is not a separate taxable entity, it files an information tax return, not an income tax return. This is why the profits and losses and the tax implications of those flow through to the personal return of the shareholders. Okay? Businesses organized as C corporations pay the corporate tax rate, which is 21%. But other business structures, such as an S corporation, again, is considered a pass-through entity, and therefore their income are taxed at the owner's personal tax rate, which could be between 10% and 40%. Okay? Also, S corporations allows for more flexibility in terms of deducting businesses' losses on the personal tax return. If the business experiences a loss, a shareholder can use that loss to offset other income on their personal tax return. However, there are limitations to these deductions. So it is highly important that you consult with your tax professional to ensure that you remain in compliance before filing your tax return. Okay? Now, according to the IRS, generally, an S corporation is exempt from federal income tax other than tax on certain capital gains and passive income. Also, as an S-corp, the owner should receive a reasonable compensation as a W-2 employee. This compensation must be reasonable in the IRS eyes. So, you cannot pay yourself $10,000 a year, $20,000 a year, and expect to think that's reasonable in the IRS eyes. Here's what I recommend that you do. I recommend that your accountant performs a payroll analysis and pull case studies and information and publications directly from the IRS website and use that information to help you determine, based on your technical skills, your years of experience, everything that you do, help you determine what is a reasonable compensation. This payroll analysis is exactly what we do for our CFO clients here at Say Yes to Profits. If your CFO or accountant can't do that, that means you need to call us right now, because we only offer that payroll detail analysis for our CFO clients. It's also worth noting that S-corps do require more administrative work than other tax entities when it's time to do their taxes and when it's time to perform financial duties. There are other additional administrative work. So you want to consider that. For example, an S-corp must file an annual report to their state. They must hold regular shareholder meetings. They must detail the minutes from those meetings. They must have bylaws as well. Okay? Now let's shift to an LLC. LLC, as far as tax implications, have flexibility and simplicity that S-corps may not have. Okay? Like an S-corp, an LLC's profits and loss pass through to the owner's personal tax return. However, LLCs do not have the restrictions on ownership that S corporations have. For example, S corporations can only have up to 100 shareholders, and these shareholders must be individuals who are U.S. citizens or permanent residents. LLCs, on the other hand, have no such restrictions, which can make them more appealing to larger companies. However, an LLC cannot raise capital, right? And so they can't have stock, which they can issue to investors. So that may be a drawback. In addition to that, when you are an LLC, you're subject to self-employment taxes. Now, as of the date of this video, self-employment taxes is 15.3%. So not only will you have income taxes as an LLC, you will also have self-employment taxes of 15.3%. And so you want to consider all of that when determining if you should be an LLC. Now, unlike an s-corp, an LLC has less administrative requirements, right? You don't have to hold an annual meeting. You don't have to have minutes from those meetings. However, you do have to consider the other tax implications. Another thing, as an LLC, you, in some cases, may not be able to offer tax-free fringe benefits to your team members that you can offer as an s-corp. And here's the thing, those tax-free fringe benefits are actually tax deductions for the s-corporation. Game changer, right? So you really want to consider all of that when determining if you should be an LLC versus an s-corporation. Here's what I need you to understand. Overall, it is crucial to carefully consider the tax implication when selecting the right entity type for your business. An S-corp and an LLC are two of the most popular entity types out there, but both options have their advantages and disadvantages as far as taxes. So you really want to map out your overall goals, where you desire to scale to, who you're going to have on your team, what benefits you want to offer your team members, what tax benefits you want to take advantage of as an S corporation, and so much more when considering being an S corp versus an LLC. Again, there are tax strategies and tax savings an S corp can have that an LLC cannot. But that does not mean that your business will benefit from being an S corp. You may benefit from being an LLC. I highly recommend, again, that you sit down with your accountant and you discuss the advantages and disadvantages as it relates, or they relate to, your particular business. This is something that we do with all of our clients before they shift to being an S corporation. Now, if you have any questions or comments, definitely leave those below. Also, make sure that you hit the subscribe and notification and like button. And if you really enjoyed this episode, leave us a raving review, no matter where you're listening from or where you're watching us from. All right. Last but certainly not least, if you need a reliable CFO company that handles all things related to your finances for your business, visit sayyestoprofits.com/session and schedule your complimentary discovery session today. This is Octavia Conner, and until next time, say yes to profits. Toodles! Thank you for tuning in to another episode of the Say Yes to Profits podcast. Download your free gift from this episode by clicking the link in the description. Also connect with me on Instagram at Octavia Conner CFO. And if you would like a glimpse into how we help our consulting clients manifest, maximize, and maintain profitable $1 million firms, schedule a discovery session today at sayyestoprofits.com/session. Until next time, say yes to profit.